Hey everyone, welcome back to Crypto Cash. Thanks again so much for joining me here. I hope you're having a fantastic day. Quick look here at Bitcoin. We're going to double check a couple of things here. 65.5 is this massive drop followed by a significant increase, and I want you to kind of get in your heads here that we're still mostly bearish. I wouldn't say that you want to attach yourself to that bias. We're still generally on the macro looking good. But once more, the short-term descending pattern that we're seeing here is still holding pretty strong. So we want to kind of presume it's going to continue until it doesn't, right? But once more, larger time frames are exuding still some bullish and larger beneficial behavior. So the sky is by no means falling. Try not to worry or over concern yourselves with that. If you are new to the channel, welcome aboard. Quick little congrats to our community members here. Got some awesome profits from yesterday. Took an XRP short, 45% in 12 hours. Previous fetch.ai short, of course, 52%, and then ICP short, 28%. While everyone else is going long with those inverse head and shoulders patterns, we are actually taking the safe route and effectively taking some safer, low leverage, low position size shorts. So congrats again to those members who followed those trades and didn't get shaken out with that little XRP fake out. Okay, so let's quickly note a couple of things here. Obviously, the last 7 days, we've seen a lot of leverage at about 74, 75K. That's pretty standard. We're probably not going to see that level swept anytime soon. It'd be very odd to see a run back up to 75K at this point. Not like it can't happen, but it shouldn't, right? Just simply put, that's where we're at. A run to 70K, maybe. We have some leverage at 70,000, 71,000, but majority of longs here at about 60 to 61K are pretty heavy, okay? My guess is we're going to see one last sweep down to that level, 60K, and possibly see a bounce from there. I say possibly because we don't know for sure, but 60,000 was the previous resistance level, kind of that psychological resistance, especially that being, kind of somewhat of an area of consolidation a few years back. So 60,000 seems logical for a pivot. That's also where we have some key level supports on larger time frames. So let's go ahead and take a look at that here, just so I can kind of explain what I mean by that. So if you look at the larger time frames here, this is the most recent low to the most recent high. Basically the low back at about 15,500. That was roughly November 21. Okay. It was about a year and a half ago we had that low. Currently, we hit our high about 73,800. And if we look at these fib levels here, we can see 0.618 down here at about 38K. And then, of course, right there, 0.382 at 51,500. But more importantly, 0.236, a key level fib level at about 60,000 even. And so it seems like a likely pivot place there. And if you follow that back too, there are some previous week closes there, if I'm not mistaken, right at that level. That's where the price action closed when we first hit that all-time high back in 2021. Okay, so that's essentially some weekly candlestick closures at that level. So all the more reason why the 60 to 62,000 it is a pretty solid support range. Okay, again, just some previous weekly and/or daily closes, as well as another fib level there that is potentially going to hold the price action in place. If that doesn't happen, there's a slim possibility we see 0.382 fib level here at about 51,500 retested. I have limit orders all the way down there just to be on the safe side, but again, me personally, every time Bitcoin drops another 500, I'm adding 3,000 or 4,000 to my bag. Just another, just keep on adding, folks. That's honestly where we're at. I know it sounds kind of weird at this 60,000 range, and if the price continues lower, then we'll be happy with we got in. If it doesn't, then of course it continues higher, and you're kind of left out in the rain. But you haven't dollar cost averaged into Bitcoin yet. I wouldn't say you're late to the party, but I don't know. I personally feel 60,000 someday will be pretty sought after, and 60,000 is going to be the new 15,000, if that makes any sense, within 5 to 10 years. It's just my speculation. I could be way off, but I do personally think that we're going to see this the game is changing with the ETFs. Okay, anyways, different story altogether. MACD is diverging here. We can see obviously we're still bearish in that sense. We see RSI coming down closer to 50. Being still over 50 is still a good sign, by the way. And then of course, money flow index is still fairly high. So there's still money flowing into this coin. And with stochastics trying to swing up here for the second time, we could see a lot of support in this range here. In fact, 65,000, if you look at the daily here, we still have yet to close below that level. Okay? I mean, I'm kind of rounding up a little bit, but yeah, if you just kind of take this level here, I can even draw it down a little bit further. It's roughly what, 65,200 as a close approximate. We've had 3 out of the last 4 daily candlestick closures close at a little or higher. Now I'm presuming today will close above that level, just based on that example, but you should never assume that's going to happen. In other words, we have 6.5 hours left. Anything could occur here. So if we do end up closing at 65.2 or higher, that would kind of prove and reaffirm that as a somewhat of a solid support. Again, I personally don't take a bunch of trades off just support levels. I like to look at everything. And in fact, yesterday, if you had because there are some folks in chat talking about the inverse head and shoulders in the 4-hour time frame, and I mentioned, hey, it's important to recognize that it's a pattern, but it's equally as important to recognize the proof in what we see here. So if you saw my video from yesterday, I was very bearish in the sense of the fact that every single time frame was exuding bearish behavior. While the daily time frame is still looking pretty decent here, the truth is we're under and or within basically testing that 20-day SMA at this point, and that leads us to believe that we have a shift in momentum here. Okay, we've got this larger ascending trend line here, which is working still fairly well. We haven't tested that yet, but truth is, we break below 60,000, we'll have a different conversation altogether. But as long as we maintain above the 50-day SMA and stay over 50 on the RSI, I think we're still in pretty decent shape. Okay, so to me, the daily time frame isn't terrible. It's certainly breaking bearish, but we're not full-on confirmed in a bearish downtrend. 4-hour and the hourly are confirming other things, right? If we take a look here, we're underneath 3 out of the 4 moving averages. This volume profile here, this point of control, 68,000, is a pretty heavy amount. And we also see a similar thing here at 67,000. Okay? So 2 heavy concentrations of volume at 67 and 68,500. So 67/68.5 are those 2 areas. Being below that is a strong confirming factor that we are on the wrong side of the tracks here, and we've lost that volume support. Okay? And losing volume support is never a great thing. We're still under 50 on the RSI. Till we get back up over this, I'm going to confirm that we're still divergent here, so to speak, to the downside. We can also see stochastic swinging up, which is natural when you have this little knee-jerk reaction after a pretty significant downtrend. We do look at TD sequential. We came down to a 7 or an 8 before it took that little bounce there. So it makes sense that the price is trying to recover because it's been overextended to one side for a while now. We're trying to get a MACD convergence, but haven't yet. So by no means is this any bearish behavior. Breaking above 50 on the RSI, getting a MACD convergence might be a good consideration for a long position. But at that point, the price action would be up here retesting the $67,000 range. Okay? And to me, that seems like a pretty solid resistance based on what we just discussed. So I really don't think that we're in a position right now where the price is going to continue to run. But if it does break this descending trend line, I think we have a shot or a chance at switching gears here. But by no means is this a successful thing. We've had basically 2 dead cats here in a row, just letting us know that we're just kidding. Price is going to continue lower. So we want to presume that it will until it doesn't. One other thing to recognize too here, if we draw out the most recent fib levels, these are not the macro fibs, these are more so, I would say, micro fibs or midterm fibs, because these are drawn out from this most recent low, March 5th, right? So that's about 2 weeks ago. We had that very strong manipulation down to about 57,000. These fib levels here, drawn from the most recent low to most recent high, kind of tell us that we got a solid bounce off this golden pocket. This is at 0.618, 0.5 fib level. So again, this little, 0.618, 0.65 fib level. In other words, the level just below 0.618 is commonly referred to as a strong support level / golden pocket. So that's really where we saw a nice little bounce here so far. So that is a very positive, reaffirming factor that we could break this descending trend by establishing higher highs and higher lows and using that as the new support. So there's possibilities that we could see a shift in reversal here. But we are still too early. It's still premature. We also got FOMC meeting tomorrow too. And as soon as Jerome Powell gets up and destroys the market, that's where you want to consider trading after that happens, right? As soon as he opens his mouth, the market just goes all sorts of crazy. So pay attention to that. Watch that tomorrow. Watch it live and compare it with the charts. It's always very interesting. But it's something worth paying attention to, just because obviously that'll factor in too. So I would just be cautious and careful leading into that. I'm considering just waiting until after the meeting tomorrow to take my next set of trades. Unless I find a very perfect trade setup here today, we're probably just gonna sit on the sidelines and wait. And you'd be surprised how beneficial it is to wait and sit on your hands versus just jumping in and jumping out and just burning all bridges and just feeling like a total mess because you're just trying to force trades. There's no reason for that, okay? So good patient traders are very healthy and consistent traders. There's a reason why our community doesn't get destroyed in these markets. Yesterday, for example, XRP jumped up 10%. We were still good in our short position, and even though it happened almost instantly after we took it. We took profit this morning, as a matter of fact, and that happened because we were patient, we didn't get shooken out, and we used low leverage because without it, we would have gotten destroyed, okay? Again, different scenarios, folks, but if you like to be successful and consistent, I'd recommend checking out our premium group. They have some awesome traders over there. So thanks again to everybody for being awesome parts of my life. Last but not least here, we're still under the cloud. This is pretty definitive. This is another example here of yesterday where we had some people saying inverse head and shoulders is going to pop off right here. And I was saying, wait, nope, that's why I confirm trades before I take them. Granted, we missed out on our short position here because of this, but the simple way to understand it is that we had a cloud rejection. Okay, so if you can see that here, you can see the price action comes up to the cloud, it's rejected 4 or 5 times and then comes back down. Okay, this is exactly why you wait for confirmation above the cloud before you take a trade. Okay, so the price action was like this, then you consider taking a trade because we broke that descending trend line as well. I know hindsight's 2020, don't get me wrong, I wasn't here to be able to monitor that specifically, but leading into it, I said, this X marks the spot. If we do not close above the cloud, we would want to consider a short position. Granted, the price continued to run before we got in, and I'm not going to try to catch a falling knife, but generally speaking, that's what we're looking at. Okay? That's what you pay attention to. This is why the cloud is such a powerful indicator. So the truth here is that our short position should still be open. That's basically what it's saying. Lagging span is getting closer to the price action, so hypothetically, you may want to consider closing your position or trimming it. You should have taken profits by now anyways. If you jumped into a short position and you hadn't taken profits, what are you doing with your life? Literally, like, it's crazy. People can jump in and be up like 300% on like a 20x leverage trade, which I don't recommend. And they sit there and they get super greedy and they don't take profit. And now they're sitting with their, sitting on their thumbs, wondering what the hell happened. Don't do it, folks. Take profits when you can. Here and now, no reason to consider a long position. There is 0 reason to consider a long. If you bought this dip, good for you. I bought the dip too on a spot bag, but I'm not taking a leverage trade without confirmation. All right, anyways, enough rambling. I hope you learned something today. Thank you so much for watching. Please like the video, greatly helps, and appreciate that very much. We'll look forward to seeing you all in the next one. Hope you have a great rest of your day. Thanks for your time. Bye-bye.